changes to the furlough scheme. So Rishi popped up last week and made a sort of predictable but a big announcement that we were all waiting with bated breath to hear about how the furlough scheme is potentially going to be extended beyond its current phase, and what the winds down of the furlough scheme, which can't last forever, is going to look like. So just as a bit of a reminder, the furlough scheme was set up to allow businesses to furlough workers and receive a grant up to £2,500 a month, or 80% of that individual salary, when the individuals were furloughed, which meant they were completely absent from work. So they couldn't be part-time, they couldn't work from home, and they could do a bit of training, but ultimately you had to take some of your workforce and you had them to be completely absent from work. And in doing that, you could apply for this grant, which would cover 80% of their wages. And as we've seen through I think most of our client base, of what employers have been doing is reducing people's wages to the 80% cap, so that the government were entirely covering the cost and saving the jobs of those individuals. It's been a hugely successful scheme and very costly scheme across the UK, and I think will be interesting to see now in the coming sort of 6 months or so the impact on us as a nation of the cost of bearing the cost of that scheme. But over 8.5 million people in the UK are currently effectively on the government's payroll. So a big portion of people. So this meant it was really important for the government to be able to come up with a very credible and well thought out phase out of the scheme. We couldn't have a scheme which, come the end of June, was entirely cut off. So starting July, we had to support our whole workforces again. We needed to a slow phase out of it as demand for our services, our products, etc., started to build again. So what's the latest and what do we know? So first of all, a scheme of some sort will continue until the end of October, until the 31st of October. The new scheme that starts in July will now allow what Rishi called flexible furloughing, or you can flexibly furlough your staff. And this is a really key part of the scheme, as one of the biggest criticisms of the scheme was often that the scheme encouraged businesses to stop working, encouraged businesses to stop employees being productive. So the new scheme now will allow the slow phase back in of employees. Okay. Now, any employee who is flexibly furloughed, for the time that they are working in your business, they will need to be paid a normal wage. Okay, so this is what Rishi said, so literally verbatim, they will have to receive their normal wage when they're working. On the 12th, we're due to receive some more details about the scheme, but one of the things I'll be looking for is whether this normal wage has to be the original wage that you had that individual on, or whether that could be some other agreed amount. It just wouldn't have the individuals, it wouldn't have government support behind it. So I'll be interested to see what that is. And the other feature of the new scheme will be the government support. So the government grant as part of the scheme will slowly reduce month on month until we come to October. So your employer's contribution will increase month on month until we come to October, where the scheme will be pulled out entirely. So thinking through this, actually, sorry, just to focus actually on how that part works. So the phase out of the government support, because it's actually quite crucial for how people are thinking about and assessing this scheme over the coming months. So let's just look at that in focus. So June, July. So the current scenario as we know it. So the extended period of the scheme as it's currently set up, where the government pays 80% of your employee's wage, plus the government pays the employer's NIC and pensions. So the statutory pensions contributions that you're probably making on behalf of your employees. Okay, so the June and July will be as normal. We know that's just an extension of the normal scheme. But come August, the first phase out of the government support begins. So the first step is that the employer, so you as business owners, will now have to meet the NIC and pension contributions if you are making them for your employee. Okay, so the government support will stay 80% of gross wage, capped at £2,500, but you'll be paying the NIC and pension contributions via payroll. Come September, we get the first quite large structural shift. Okay, the government support will now reduce from 80% to 70% the employee's wage. And you as an employer must make a 10% contribution at the very least towards their wage, plus NIC and pensions. Okay, so what's clear here is that what Rishi has done is building the phase out scheme such that the employee is protected, so they're never going to receive less than 80% of their normal earnings if you want them to sit within this scheme. Okay, so if you did not want to meet the further 10%, as is required in September, the individual would not qualify for that scheme as we understand it at the moment. Okay, so if you want to pay them less than that, they'd have to be outside of the scheme, which would probably be less beneficial than being inside. So in September, we see this first extra contribution by the employer. And then in October, we see that take another step up. So the government reduces their contribution to 60%, employers up to 20% plus NI plus pensions. So we see this slow phase back in of what you have to contribute towards the scheme, and this ability to flexibly furlough your teams, to have them on shift patterns or have them on part-time working. So 5 things that we think you should be thinking about here. So first of all, as always, making a plan. Now, Ravi, if you could just talk us through when you're making these plans, you're talking to clients about this, what are the attributes of the planning or the features of the planning that they should be now doing?
Sure. Sure. So for most of the businesses and most of you out there, this last little while has been about cash conservation. And we've done we've spent a lot of time getting government grants, getting your business bounce back loans or your CIBLS, and really conserving cash through this period. And so what we've been doing, and we touched on this over the last few weeks, is as we now start to look outwards, how do we come out of this without our cash reserves suddenly draining away? So one of the things we're looking at is, okay, well, can we do for those engineering, manufacturing type businesses, and even some of those consulting businesses, can we have a shift pattern? Can we do some sort of job share? So you're taking advantage of the flexible furlough. But the key thing that it all starts with is what's the key set of staff I need, or the key team I need in order to deliver on that bit of revenue. So if we've got confirmed revenue that clients are expecting to take delivery of orders, or clients are expecting their service in the next little while, what's it going to take as a team in terms of a capacity for my team to deliver that? And then it's like, say, okay, well, how do we do that in terms of, do I bring back just my delivery team? Do I provide them in shift patterns? Do we start them in half of the team in the morning, half the team in the afternoon? But doing it in a way where we're able to deliver on orders in the most cash conservative way as possible.
Just to come in there, so what it appears that the scheme is going to allow us to do is to be flexible with this. So you don't have to agree at the beginning of July what that flexible arrangement will be. You can change it over periods of time. And one of the things I think Ravi talked about last time and is pushing that, you might mention now, is that you've got to test demand. Yeah. And so if demand isn't there, you can scale back, and if demand is there, you can scale up.
Exactly. And I think one of the things that business owners and actually staff members and team members are getting quite used to in this period is being quite quick to react. So if something isn't working within a week's period, then what's the new plan? How are we going to adapt to what is and isn't working? So that we can quite quickly figure out what is working and stick to it, and quite quickly close off what isn't. Mm-hmm. And then obviously what goes hand in hand with that is something we touched on in one of the very first few webinars, was around financial forecasting and cash flow forecasting. So it's great that once we've got a clear picture of, okay, what can we go out and deliver, what kind of revenue can we go out and secure, it then becomes clear, okay, what's my plan going to result in terms of financial results? What I'm doing today, or what my plan is for this week? How does that affect the business in terms of its financial results? And being able to model that based on your changing plans is going to become really important, because then you can start to see, okay, actually, one business might decide we want to go through a period where we're going to be really lean, and for the next little while, we're going to ask all our key staff to do a job and a half to make sure that to make sure that we're still here come December, January, February next year. Or for some others, it might be a case that, hold on, if you're one of the supportive industries to construction and that they're starting to ramp up, we might be seeing, what we're seeing is that, hold on, the construction sector is ramping up. We're a supportive industry. We need to quite quickly ramp up to deliver on our confirmed orders, but we still want to do it in a sensible way. And so we can start to plan that and see what the financial results of that are.
Good. Okay. And you know, it goes without saying that if you need us to help you with the forecasting, that's what Ravi and my teams spend a lot of time doing. So reach out to your partners and your client managers if you need help supporting that cash flow process. And I think we still got a tool that we circulated early on, which you can make use of. And Rosie, perhaps if we attach it to the follow-up to this as well, is have that cash flow tool. We know some of you found that really useful to help with your planning. Now, we keep mentioning this every time we talk about furlough is you know, HR documentation, HR advisors talk to them, and it remains you know, crucially important here. The HR advisors I've been talking to have kept reiterating that as you make changes to your furlough plans, first of all, you must communicate with employees that are happening. But from an HR legal perspective, there are probably some employees that you must re-agree with them what you're going to do. So when we originally looked at what your HR needs were furloughing someone, there was probably two categories of employees. Employees where within their contract you already had agreed with them that you could choose to furlough them for a period of time, and those employees that sat in contracts that had no mention of furloughing. And we knew those individuals which had no pre-agreed furlough arrangement, you had to agree that with your employee before you furloughed them. And as we come to the end of the original scheme, and we're now in the second extension of the scheme, June and July, you must be reconfirming and re-agreeing with those employees that you have to seek agreement from to extend them further. And then this goes beyond that to, as you start bringing employees back and you put them on flexible arrangements, so part-time working, shift sharing, short hours, all those sort of things that Ravi spoke about, then you'll need to re-agree that with them as well. So make sure you document everything, communicate well across the board, and that's to do with anything to do with employees and HR. Second to that as well, we mentioned last time that the government dropped this big pile of paper on us, this big guide for businesses going back to work. And it's very important that as employers, you spend some time digesting that, reading the sections relevant to your industry. There's some very detailed stuff there about the guidance for creating a safe place for employees to return to. I mentioned last time that I'm pretty sure that there'll be a small industry that pops up for no win, no fee type arrangements for helping employees who thought their employer did not protect them well enough when they came back to the workspace. So do pay close attention to that document, have a read of it. And for most industries, there seems to be that, you know, your industry body or the Federation of Small Businesses, that sort of thing, they've got lots of support and documentation available to help you with that return to work plans. And lastly, it just going back to it, you communicate with customers and suppliers about your intentions. You know, most of us sit within supply chains all the way up to our customer, and it's going to be working with our supply chains to be able to ramp up production to meet new demand for our products. Again, you know, Ravi talked about, you know, you could be supporting the construction, a contractor, be a subcontractor, a contractor, or materials supplier. Make sure you're talking with that whole supply chain to understand what their intentions are. So what are they seeing in terms of their demand ramping up? And also how you then can support them up the supply chain, so you're ramping up in line with them.
I think one of the things that's quite interesting at the moment is there have been quite open conversations between some of the businesses that we work with and suppliers and customers. So we've been openly talking about each other's cash flow in a way that says, okay, how can we all fit together in this nice jigsaw puzzle to help everybody's cash flow be as smooth as possible. So actually being open and communicating quite widely is going to stand you in good stead for the next few weeks and months.
Great. So just mention again is that if we're not already helping you make your furlough grant applications via the HMRC portal, we're doing that, and we circulated a tool a little while ago to help you make some calculations. And because remember, when you make this claim, you do the calculation yourself, and you tell HMRC how much you think you're owed. If we're your payroll agent, we're able to do this on your behalf through the agent portal. And we've got a quite straightforward fixed fee arrangement to help you with that. I think we're probably helping now, I think most of our payroll clients who are furloughing, but if we're not already helping you, please talk to your client manager, your partners, and we should be able to help with this if you're not already able to do it yourself. So, so closely linked, the self-employed income support scheme. So we had a few mentions of this from Rishi as well. So just as a reminder, remember this was the scheme focused for those who are out of employment and were self-employed. But remember, this doesn't include those who are shareholders, directors of limited companies. Perhaps you're a contractor working for a limited company and you earn from dividends and a small salary. This self-employed scheme is not for you. Okay, so this was for those who have self-employed income, and much like the furlough scheme, it was supporting you with 80% of your profits capped at $2.5 grand for 3 months. And it ran, the original scheme ran from March, April, May, and it's just paid out in lump sums in May. So that, remember, that portal was open. People received letters saying that you've got a date where you can go and register yourself for the grant. And we've seen people across the board receive this now as well, and it became as a lump sum. And unlike the furlough scheme, this grant was calculated for you. So you just had to be eligible. If you weren't eligible, you had an eligibility checker. You could go and check and put in your NI number and your UTR number and check that. And then you went onto a portal, you ticked a few boxes, and you received your lump sum grant. So as expected, we're seeing this extended out, so a further 3 months. However, just like the furlough scheme is ramping down in terms of the support it's providing, so is this scheme. So the 80% of normal profits now is dropping to 70%, and it's still going to be paid out as a lump sum grant, so it's not going to be a month-on-month amount like the furlough scheme. So it will next pay out, I think, in 3 months' time, and it'll be capped at £6,500 or just over £6,500, so equivalent to £2,190 a month, so slightly less. Okay, we haven't got a lot of details on that yet, and we expect again more of this to come out on the 12th. So again, how the application process will work, it will obviously work through the same portal as last time. Are there going to be any changes to that, or any changes to criteria, qualification criteria? We'll find out on the 12th. One thing we do know that we picked up and we've been tracking each week is the amount of people who are making claims under this scheme. Unlike the furlough scheme, it seems that there's been a huge under uptake in this scheme. There's been some numbers calculated that just over 1 million people who could claim have not yet done so. Okay, now I think part of this is that the qualification criteria is not overly clear. So I'll just touch on that in a few moments and just check that we're all up to speed exactly if I can make a claim or I can't make a claim. Just a few more important points. Now, if you haven't made a claim already under this scheme, you must do so by the 13th of July. So you've got just over a month to make that claim. Otherwise, you cannot claim for the first 3 months again. You don't have to be part of the first claim period to make a claim in the second. And if you have claimed in the first, you can claim in the second as well. Okay, but make sure that you're looking at this over the coming weeks to check if you are self-employed and you haven't made a claim, you've got just over a month to do so. So just having a little small focus on that qualification criteria. Now, I think that some of the stuff is very straightforward. So being under 50 grand profits, for example, you must have filed your tax return for the 18-19 year. But the bit that is sort of, I think, probably purposefully a grey area, because it's a self-certified process for a lot of this, is the lost trading partnership profits due to COVID-19. Now, HMRC have not given us any particular calculations or formulas where we can black and white go, yeah, you're in and you're out. They've just given some examples of this could be a case where you think you are losing profits due to COVID-19. These include things that stop you being able to work in a normal way. So you're obviously sick, or you're isolating, shielding, or supporting children, elderly parents, or the like. Or you're unable to run your maybe slightly more scaled self-employed business because you're a brickie, something you can't buy bricks and bills merchant because it's closed, so you can't continue your jobs, or there is actually just no demand for your services. So we obviously have seen hairdressers across the country not able to look after us and cut our hair, and lots of hairdressers are self-employed. I think a lot of a huge portion of the industry are self-employed individuals. So you'll be experiencing a drop in ability to make profits, but it's a self-certified statement, and indeed if your business is doing better than ever, or nothing has changed, then you are not eligible. If you're certifying that you've seen a drop in profits, that's probably not a correct statement to make. We're not sure how HMRC are going to monitor this, but you could quite easily deduce that once you put in your next year's tax return, HMRC will be able to see a trend in profits, and I wonder whether if they see that your profits soared, or you relatively stayed level for the year, whether they'll make inquiries as to whether you should make the claim or not. But that's future speculation. There is an online eligibility checker where, I said before, you put in your NI number, you put your UTR number, and it'll let you know whether you're eligible or not, and then it will invite you into the further portal, which you've got to register for to make your claim. We can't help you do that in terms of doing the application on your behalf. It's not set up for agents to do that, and HMRC have specifically written to agents like ourselves to say, please do not do this on people's behalf, and we've got ways of detecting it if you are, so that could slow down your claim. So please don't ask or require us to actually do that, because it will actually endanger your claim if we're logging on and making that claim for you. We can help you with finding a UTR number and NI number, but that's about it. Okay, so Ravi, it's probably worth just pinging through a few of these of what we're seeing happening with our CIBLS and bounce back loans.
Sure. So unsurprising to everybody, I think the bounce back loan has been very popular, and actually has had a really high approval rate, close to 80%. Interestingly, the mortgage payment holiday has been extended. And what we're still seeing is that there are still some lenders only now being approved for the business bounce back loan. So, for example, Metro Bank announced back end of last week that they have been approved and that they're working on their application process currently. That's good news for all you people who bank with Metro for your business bank. What has been quite interesting. So just before I go on to that, what we have been seeing is that those somewhat slower banks, like I feel like we always talk about HSBC, but like the HSBCs, they're starting to pay out some of those applications that were made in the second and third week of May. So we are starting to see payments come through now, and they should start to speed up as the amount of applications flatten. What has been quite interesting is that and we've been seeing specifically with Funding Circle, is that as part of Funding Circle's discussions with businesses around repayments through this period, one of the things that they are suggesting is that businesses could look at the CIBLS loan as a way of refinancing their current loans, as a way of helping businesses through this period, which obviously isn't available to a wide variety of businesses, but it's definitely worth considering if you're a good going concern into the coronavirus period and you're a strong lending proposition. Having a look at your loan book over this period, and having a look at how the nature of the loans you've got in the business, and considering, actually, could I refinance these as CIBLS loans, is something that we are being approached by with Funding Circle and some of the other challenger banks, and something we're considering with other businesses.
Just to come in there, that it could be a great strategy for removing personal guarantees on loans you've got already in place, which obviously always a going and ongoing worry for directors running small businesses, that they might be exposed to the tune of hundreds of thousands of pounds on unsecured loans in their business. And remember that CIBLS loans that were below 250, I think, remember right, Ravi, that you're not allowed to have, or banks are not allowed to ask for personal guarantees on them. So this could be a good chance to refinance your current loan with a new lender like Funding Circle or what have you, and have a loan which would usually have personal guarantees on it, but won't do under the CIBLS scheme.
Completely. And then obviously what we are now starting to see is that, and we touched on this previously, businesses can have a business bounce back loan that then can be later refinanced into a CIBLS loan. So what's been quite interesting is that you had a big rush to the gates to get your business bounce back loan in, to kind of provide some immediate calm. And we're starting to see some interesting ways of either getting larger amounts of money, so refinancing your business bounce back loan into a CIBLS loan, or as part of looking at the ongoing future of the business, refinancing your loans as CIBLS.
Yeah, that's really key to point, because last time we spoke, we said you couldn't do that, and it wasn't clear. Well, at that point, it seemed you couldn't do that, but we've now seen some people, or some lenders, check and test that. And they're reporting that they are allowed to do that now. So actually what this means is there is a good strategy for getting fast money, in that your business is struggling and we can't meet payroll at the end of the month. Ultimately we need 500 grand in the business to keep us up through the period. But if we had 50 grand now, we'd be able to meet payroll. Your strategy could be to get your CIBLS loan in, which we know for a lot of people is coming in within the week.
Yep.
You get your 50 grand and you meet payroll, and you start your CIBLS application, which then refinances your BIBL loan that you had in place. So you can do that. So the fast money BIBL loans are available to those who do seek further cash later down the line.
Yeah, exactly. And you are starting to see some of those. I know John, you and I touched on this over the last few weeks, but if you're not hearing if you still haven't heard from your high street lender, now really is the time to go. Now is really the time to speak to the smaller challenger banks who are part of the business bank partnership, because they are starting to move faster and faster.
Great. All right, so I think that brings us to the end of most of what we talk about. So Rosie, shall we move on to some Q&A?
Yeah, great. Thanks, John. Yeah, we've got some questions that have come in here. I'll start with an interesting one from Lucia, who's saying their business has not been closed, but some staff chose to be furloughed because they felt uncomfortable coming to work.
Yeah.
They're saying, do they have to honour the furlough scheme going forward, or can they end it in July and say they have to come back if they want to keep their jobs?
Well, so this is a sensitive question, in that the government now have changed the next phase of their plan, if you want to call it that, they are encouraging workers to go back where it's safe to do so, and they're providing very clear guidance that shows how a company would be safe place to come back. So you read through the guidance and saw all sorts of things, from making sure we've got the 2 meters social distancing space, that you're making sure if you've got kitchen areas and stuff, you're removing things from that would be shared, that you're not asking people to be in closed spaces together. If they are in closed spaces, you provide all that PPE and all that sort of thing. So so as an employer, you're probably moving to the phase now where you can become a bit more forward with your requests of your employees, but you must make sure you've got a robust plan and all the PPE and stuff that's in place to make your employees feel safe to coming back. I'd be hesitant at the moment to sort of move to the sort of heavy-handed end of the spectrum, which is sort of, if you're not wishing to come back to work, then we need to go to a disciplinary process. I'd say we're maybe a little bit from that, but if you are getting towards that, I sound like a broken record, but you will need to seek HR advice if they're employees, because you will need to enter probably into some sort of disciplinary procedure if they're refusing to attend their place of work, which, if you're deeming it a safe place to come back to, you probably got some sort of right to be able to do that. But absolutely talk to HR advisors, as disciplinary processes are full of do's and don'ts to get it right.
John, do you think we'll have any further update on that issue? Because I imagine quite a few people could be faced with that problem if their staff don't want to come back to work. Are you expecting anything further?
Well, I don't think we'll hear the government take a firm stance on it, because it does talk that does interact closely with employment law, and the government don't really want to make too many changes to actual employment law during this process. So I think it's, and the government obviously want to, as much as they can, sit on the fence in terms of requiring people to go to work, and obviously as an incentive for all of us to keep businesses moving, as the government are a little bit scared to talk about this, but recession kills almost as quickly as a pandemic. So they are ultimately concerned with minimizing recession as well as minimizing pandemic at the same time. So there is a push by the government to do that, but I don't think they will yet take in the near future a stance saying employees must return to work. Maybe a while yet. Okay.
And we had a couple of questions around the flexible furloughing and the time period. So this, so previously there had to be this 3-week period, but if you're sort of flexible furloughing, how do you need to stick to that 3-week period again?
So at the moment, I mean, we'll hopefully find out more on the 12th, but at the moment it seems there is no minimum, and that you'd expect that to be the case, because if someone is working 2 days a week and they're not working for 3 days a week, you've got to be able to get that right and allow people to flexibly choose what part-time means. You'll have to remove any minimum. So it does seem like the flexible version of the furlough scheme is you can basically switch people on and off as you go through it. But remember, when they are back at work, you, in Rishi's words, you must pay them their normal wage, which at the moment we can only assume that means their normal wage of what you paid them before. But in the details, hopefully to follow, we'll maybe see that it could be some sort of reduced wage that you pre-agree with your employee.
Okay. And we had a question about the NI and pension contributions from Elizabeth Benjamin, who's asking if she has an employee who's on the minimum threshold of income tax, which is $730 a month, would she then need to still pay this national insurance and pension contribution, or was the salary too low?
Well, so only if NI and pension are due. So if you're below the NI limit and there's no NI due, there's no NI to do that. And the same for pensionable salaries. So it's yeah, if they're not pensionable salaries, then you won't need to pay that. There's nothing new that you would need to do that you weren't doing before. So if there was no pension or NI that you were paying before, there won't be any here. It's pension and NI be calculated in their normal way, and if it's due, you've got to pay that instead of the government paying it.
Okay, and we have a question here. If an employee has been furloughed, can they leave the country but with the intention to return to the UK to work? So can they still get their furloughed money but not be in the UK?
Yeah, I think it's unlikely to see anything in the detail that requires them to stay within the UK. I think the only thing stopping us leave the country now, which I would love to do for 2 weeks and find a sunny beach somewhere, is just travel restrictions. So I doubt there's anything in the furlough scheme.
Yeah.
Oh, okay. And we had a question just come in from Jerry. I'll just read this one out. So if you go from full-time to part-time on the furlough scheme, can you change the number of days the employee works during the part-time furlough arrangement through to the end of October?
Yeah, it seems that it's entirely flexible. And I think, when Ravi was talking before around, you've got to flexibly respond to changes in demand. So, if you decide, you say you've got a team of 5 people working in a manufacturing environment, and you think your demand is X and it takes 3 people to be there 3 days a week, you do that and you realize demand's now soaring, you need those people to go to 4 days a week, you need to be able to flexibly do that. And that's what the new scheme is allowing you to do. So you can chop and change, increase their time working and decrease their time working. But come end of October, that's it. No more flexible time, no more furlough scheme available. If you're having them part-time after that, that will have to be now a new agreed thing that you do with your employees, that you obviously, again, use your HR advisors to make sure you're writing the right letters and making the right agreements with them. Okay, excellent. Well, that's all the questions we had, John. So we can leave it there for today. For everyone, you will get the recording and the slides this afternoon. And I hope you found that useful. Back over to you, John. Excellent. Well, as Rishi comes out with more statements, and certainly after the 12th, when we've been promised more details about the scheme, we'll get you all together again and let you know what we understand about them and help you understand it a bit more. And indeed, if there's any other thing new that's useful in the meantime, we'll post another webinar and get ourselves together to look through what we find that's interesting. In the meantime, thank you very much, and I'll see you guys later.